Shut your Discord stuff off.
All right. Hey, guys. How's everyone doing today?
What up?
Whoa,
Hello,
whoa.
Mr. Michael.
Marianne, on a nice camera.
DJ.
How is everyone doing? Michael, did you get a new haircut?
I did. It's always a new haircut for me.
Mariano, I think you need to visit
Roll
his
off the
barber.
I can't grow a beard like VJ though, unfortunately.
I mean, I can't grow a beard like you, Michael.
DJ, do you put beard oil in that thing? That
Yes.
thing listens, man.
I was actually going to ask for beard oil while I was here.
Yeah.
Use beard oil, goat manure. That's,
Manure?
Yeah.
Not goat's milk, huh? It's not
How much of a fire hazard is it? Can you like smoke, or it's a risk to catch fire?
No, there is no fire hazard, but sometimes you need to prevent forest fires by trimming it on a regular basis.
That's why you got inspired to create redwoods, man. You know?
Yes.
So,
All right, we're here on episode 2 of the BitBrain podcast, and we got some.
Whoa! Episode 2.
yeah, baby.
We got some new fancy, a new fancy intro that we can share. So I'm gonna go ahead and. Yeah.
What I'm wondering is, did you use veneers for my smile, dude? Because that's a nice touch.
It was all AI
nice
doing,
touch.
but we can generate some new mouths for you.
I think my dentist is gonna be, a little bit jealous. So, yeah, but wild. This is awesome. Welcome to episode 2, everybody. So excited to be here, and we got a lot going on in the crypto space right now. So many of you have probably heard that we've got a new ruling on a case as it relates to Ripple and the SEC. So lots of exciting stuff going on there. You probably saw Ripple price surge considerably and then dump already. So there went that funness. However, the judge ruling in the case is kind of a landmark deal, and so we're going to discuss that. We're going to unpack that. So this seems like a landmark event, and it really is. So, but in particular for crypto and in particular for DeFi, I want to ask the guys, what do you guys really make of this ruling? Is it as big of a deal as everybody's talking about, or is it a nothing burger? So, Michael, let's go with you first, my friend.
Yeah, I think it's a big deal. I think it marks the bull run. That's what I think. I think this is the beginning. I think it doesn't mean it's coming tomorrow or next week and all the prices are going to start going nuts, but I think it's a sign of brighter times to come. I think it's time to really start thinking about where to plant your seeds, is what I think. So
this could be the kind of the fire, the ignition that kicks off the next run.
And as far as like other projects, it doesn't mean no projects are going to be a security. They're going to rule, I guess, project by project or define it however they do. But I think we know that Ethereum is not a security now if XRP isn't. So that's how I'm feeling.
Well, absolutely. I can see that. I mean, if XRP is not, it would make sense that, Ethereum's going to at least get grandfathered in. Again, yeah. So VJ, let's hear your thoughts on this.
Okay. The rulings are essentially a way for having clarity so that in future, other projects can use the same guideline. That's why we have ruling. Right now, we don't have clarity. And this ruling absolutely makes no sense. On one hand, the judge, Torres, mentioned that this is a security. The tokens, XRP tokens, which were sold to institutional investors, are considered security. On the other hand, the tokens that were sold to the public is not security, right? So we cannot use, there is no clarity, additional clarity that we have gotten by this ruling. So this creates a lot more confusion. Obviously, people in the crypto space have been treating this as a landmark judgment, and they say, okay, the judge now has made it positive ruling again for all of crypto. If you look at what Gary Gensler mentioned, he said that he's both pleased and disappointed by the crypto ruling. In some ways, I'm also in the same category because good that there is some kind of a ruling which is out there. On the other hand, it doesn't give us much clarity. We cannot use this as a foundation for other projects. So this is very confusing.
Can you unpack that a little bit more on what you mean by it being confusing? So there's the good part, there's the bad part. Maybe kind of going into a little bit more detail there of some nuance, if that's possible.
Yeah. So if you look at the ruling, right? So there are two parts to it. Part one is that they did say that when Ripple sold the XRP token to institutional investors, that was a sale of security, right? That is the first part. And the second part is that the XRP token sale to the public was not considered as a security. Okay. So that's in the same ruling. Obviously, people took the focus on the second part, which is the sale of XRP token to the public, and that's not a security. However, how do other projects in the future use this as a framework for them to issue tokens, right? If a new project is launching, did it provide additional clarity? We have the Howey test, which is the test that is used for determining whether something is a security or not. And this did not give additional clarity on how we can use Howey test or other additional information to get clarity on new projects. Is Ethereum security based on this? We don't know. There are other projects that have raised money, things like Cardano, other projects like Cosmos. There are different projects that have raised money in the process, even including projects that are new that haven't launched, like Layer 0. Are they security or not? This particular ruling doesn't help us get more clarity around helping future projects in the space.
Got it. Okay, so you're just saying that this isn't necessarily a watershed moment that a lot of the crypto scene is, or crypto Twitter and other people are suggesting that it is, right? So it's more of kind of there's still a lack of clarity. This doesn't necessarily, we don't essentially know any more today than we did 2 weeks ago. Is that kind of what your stance is, Vijay?
Yes, exactly. Okay. Exactly.
So
personally,
go ahead.
Personally, I do think that it's from what I could see, the Ripple and the XRP token. Ripple is the company, XRP is the token. XRP has a lot of characteristics of securities. Obviously, I'm not a securities lawyer, but it's very centralized. The XRP Ripple claims that anyone can run a node. There are some limitations around who can run a node. So from the outlook, from just looking at a third-party perspective, it has a lot of indications of being a security, and the code ruling doesn't give additional clarity on that.
Got it. Mariano, what say you, my friend?
So two things essentially that I believe. So the first one is that I believe that this ruling is not favorable for Ripple. And I'll explain why. Because Ripple for the past 5 years have been essentially playing around with it's a security, it's not a security idea, with the excuse that since they are in this trial and this whole process, they cannot expand and scale their network. And I feel it's actually a bad thing for them that it's not a security according to the law, because it's now they have no excuse. And in my opinion, this will be a bad catalyst for Ripple. On the actual topic on whether it's a security or not, I agree with BJ that it's not actually a positive thing. I was actually a little bit surprised on the interpretation of the judge, even though it wasn't clear that they actually declare it not a security, because from all that I've been reading and all the precedents that are happening, most of the crypto tokens are actually securities according to different interpretations. So I thought the market was moving into that direction. And the second thing is that more often than not, crypto Twitter celebrates stupid things. the Ripple thing could be maybe the not so stupid thing that was celebrated. But I read last week, which I thought was like incredible, that the SEC essentially accepted the filings from BlackRock to do the Bitcoin ETF, right? And crypto Twitter was celebrating it as if it was like a huge achievement, when it's just like they registered that they will look into it, right? It's not a positive news. It's like general standard procedure. And people on Twitter were like, "Yay, they accepted it," or something like that. And it's like, it's not at all. I mean, I can create an ETF, and I will also it will likely be accepted for them to review it later.
Yeah, I think to that point, it's interesting because it I think crypto Twitter at this point is kind of looking for any news as being, could it be positive? And if it could be conveyed as positive, or there could be like a morsel of positivity in it, it's like, okay, it's like, wow, it spreads like wildfire, right? So yeah. So as far as that's concerned, what do you guys think this means for SEC Chair Gensler overall? Like, is this, again, is it a nothing burger? Does this mean something for his reign? Does this mean something for his stewardship of the SEC? Does it not? So, VJ, I'll kick it over to you first.
Obviously, in some ways, SEC has gone after, like Coinbase, it has gone after other companies in the space without much legal clarity. So everyone is looking for legal clarity, and the courts are there to decide. The SEC can use what preceding laws are there to be able to enforce them. Whereas in terms of creating new laws, that's up to the court. And in this case, there is not much clarity, and the SEC can go after these companies, but at the end of the day, they need to prove that they violated the law. And based on what we have seen, not really sure whether it is a positive or negative from an SEC perspective, because the judge did not have a clear ruling that could be used for future as to whether something can be a security or not.
So I guess, where does that leave us next? Like, what's coming down the pike again as it relates to this case, or as it relates to regulation, or what's the next kind of marker around the corner that us as crypto investors should be on the lookout for?
So it'll be good to have something like what the EU did, or what Hong Kong did, where they had, okay, this is the regulatory framework, and this is how crypto assets should be structured and regulated. They came up with it proactively. If we can have something like that in the US, where the Congress proactively says, hey, here are laws that are well thought out, and provides a framework for any company for it to use, and not just one-off cases, that will be helpful. And I'm not sure we are close for being able to do that in the US.
It sounds like we probably need a change in leadership, or maybe the next election cycle before any of that potentially occurs. I'll throw it over to the other guys, Mariano, Michael. Who would,
in my opinion, I feel like this is exactly what like the SEC and the government wants to do, right? To reach these like unconclusive like trials and these unconclusive events that leave you with more doubts than reasons. Why? Because if it's a gray market where you don't know if it's legal or illegal what you're doing, you want to do it. Essentially, it prevents people from going like all in into their projects, which is what all these companies are asking. And I feel that the reason that this is happening, in my opinion, is that the United States government is a little scared of like leaving control behind, leaving like their hands on something that they cannot control that well, as such as this crypto and tokens. I feel that eventually they will either like make a decision, and it will be like a drastic one. But in my opinion, it is not actually like a term thing. It's not that much presidential. It's more like on the ideological side of the government. And I unfortunately feel like it's gonna take a little bit more of time, like more than 5 years or so, to for the government to make a stand actually.
And you say that with authority coming from the Oval Office, so I'm pretty impressed with your background there.
Yeah, I told them I don't want no crypto in my agenda for the next 4 years.
They got an Oval Office in Buenos Aires now. I love it.
No, but like even if there was this, I don't know, I'm not sure if it was in 2021 or 2022 actually, where it wasn't even on a list of priorities for the SEC, like regulating crypto. Like the SEC like creates like a list of priorities each year, and they're like too focused, and the whole banking system was too focused on FedNow, I think it was called, which is the immediate transaction system for like wires in the United States. And it wasn't a priority. That's the priority, and that's the priority for like up until 2025, I think, where they finish implementing it, and maybe later then comes crypto. But I don't think they will like skip a step on something that they've been studying for like the past like 10 years, which is like instant transactions, to do something like crypto.
Yeah, I could see that. Absolutely. Michael, what say you from Canada? What's Canada's viewpoint on this?
Yeah, I agree with you guys ultimately, but and by the way, it's Gary Gensler, not Jerry Gensler, Dominic.
Did I say? I said chair.
I know before I heard you say Jerry a couple times.
Oh, I meant to say chair. I threw an E on the end. My bad.
But I don't think it matters what his name is, because there's a good chance they're gonna boot his ass out. But ultimately, if what Vijay and Mariano are saying is correct, I think that they actually like Gary Gensler.
Oh, we got technical difficulty.
Oh my God, Gary Gensler attacked him. It's like
Gary got on his rear end there.
I think the government likes Gary Gensler in power as the head of the SEC because he creates a lot of gray area for the space. And like you said, Mariano, that's sort of what they're going for right now. It makes people hesitate more. But it's like what you guys said before, Twitter's going crazy and everyone is spreading misinformation. And I think markets are emotional, and sentiment means a lot more than reality when markets start moving. So, even though everything you said is completely correct, I still think this brings a lot of attention to the space, and most investors are uneducated. So it doesn't mean that the bull market's off. I didn't say, again, it's going to happen today or tomorrow. It's going to take a little bit of time for things to really kick off, but that doesn't mean you shouldn't be planting your seeds and getting prepared and being careful with those seeds, not planting your whole basket, but getting ready and paying attention. And I think that's what a lot of people are doing. They're starting to pay attention again, and that's exciting. That's a sign.
Yeah, that's a fair point. But one thing that maybe like to take into account, that might like degenerates like you and me and everyone, they might be more like sentimental, like and feelings and hype. But I feel like institutional money, like they wouldn't put it where they feel like they might be committing a crime, or where they might feel like they are actually like doing something wrong because there's lack of clarity. So the BlackRock thing, was like, that's a great first step that they are doing. They're doing the ETF, which is a legal way to do things. But I wouldn't imagine BlackRock pouring billions of dollars in DeFi or in Web3, because it's not clear if what they're doing is legal, in my opinion.
Well, I think that's the only thing they're waiting for, right? So once they've got that regulatory clarity, I mean, we've heard time and time again from other different thought leaders in the space that really there's an enormous amount of institutional capital that's just waiting on the sideline, and they're just waiting for that regulatory clarity to come into focus so that they can start deploying their capital. So I think by and large that still remains the what's kind of stifling capital from entering in the space. So you pretty much got a bunch of retail that are recirculating their cash in and out of different tokens right now, and that's kind of the climate that we have until something actually sparks it. So what do you guys think are the implications for the rest of the space? Michael, you kind of touched on what your viewpoint is. Do you guys anticipate other projects really coming out of the woodwork now, being, maybe more emboldened by this ruling, or does it really have no effect? So whoever wants to take it.
I think it has no effect, in my opinion. So, but that's one person's opinion.
Yeah, I also feel like it will have no effect, but I'm sure that already somebody's thinking of this. There's gonna be an exact copy of Ripple, like exact one, and it will be like, oh, we're not a security, so it's legal, and just for saying that, they will have some attention. But of course,
Interesting.
it's
That's
nothing.
interesting. Actually, I didn't think about that, but it makes a lot of sense. You're gonna have you'll probably not have one, but you'll have many. You'll have an exact copycats spread out.
Maybe you have one that is like important, and then 100 that is
like just forking the chain basically, and then going from there.
Yeah, I mean, I'm not sure. I'm not even sure. Like, you will need to even fork the chain, but maybe if you have like the same like criteria in a way that you only sell to like people, not to institutionals or something like that. Like, I mean, you could claim that you can get away with it. Of course, you don't know, but like people will buy it, I think.
Fork the exact copy with better tokenomics.
Yeah.
And we're actually doing a product, but yeah.
All right. So fantastic. So let's transition here to a little bit of another news article in this last week, which related to Cathy Wood, who's the famed investor with ARK. She's obviously a big kind of crypto bull, has been over the last several years. And so they've announced they've sold another $50 million of Coinbase stock. So now, again, is this something for us to, does she know something that we don't? Is this asymmetric information? What really is this? So, VJ, why don't you maybe take it?
I mean, if you look at the ARK Invest, it's a $9 billion fund, and they sold 50 million, right? Which is what 50 million out of 9 billion is 0.5%, 0.4%. So I think it's part of the natural portfolio rebalancing. Coinbase is up almost 70% year to date, and ARK Invest fund itself is up like 50% or so year to date, maybe 55%, somewhere in that range. So Coinbase has outperformed the ARK fund. So this is part of rebalancing. I don't think it's considering the amount of Coinbase shares that were sold. I don't think there is anything to read into this.
Got it. I think that's good to know, or I think that's important to focus on, because you see the headline, right? The headlines grab people's attention, and they see $50 million, and $50 million seems like a large sum. But when you put it in total context of the fact that it's a $9 billion fund, and it's what probably coincides with a quarterly rebalancing. So, I think your assertion makes a lot of sense. Michael, Mariano, either of you have any input on that?
Not much to say. I mean, I think I agree with BJ. It's more of like a rebalancing thing. But on that note, like I was reading the other day, like like Warren Buffett and all those like big names in the investing world are there for a reason, and the reason is that they produce like consistent returns on the market for the past 40 years, right? And in my opinion, like Cathy Wood is like an amazing personality, amazing media sensation. But I mean, I'm not sure like she's picking the right things more often than not. Like her fund is losing money. I think that's undisputable.
You love.
I thought that you kind of had a crush on Cathy Wood. So.
Yeah,
I love her. I would totally marry her, but like I wouldn't give her my money.
Get out there.
You just want to divorce her for half her money. I see.
I think Cathy Wood should and the whole ARK investment team, they should just do like those the fancy year reviews that they do, where they project what they think is going to happen, because I mean it looks very cool, but I wouldn't actually invest with them.
Got it. Michael, your thoughts, my friend?
Yeah, no, I also agree with VJ. I don't really have much to add there.
Okay.
Yeah.
Well, there's some other news that relates specifically to our man from down under in Argentina. So Argentina approved their first Bitcoin futures contract, and it actually went live last week. So, why don't we maybe get a report from you down there, boots on the ground? So how has this been received down in Argentina?
So coming live from Argentina, here we are reporting. So it was a little bit like overblown by the media because again, like it's a sensationalistic title, and it's a good thing on itself. You know, it's a new market and a new opportunity like for somebody to play, but it is also insignificant. It won't produce like much volume. It won't mean much for the market, in my opinion. It's a nice thing to have, like the same way when the first Bitcoin futures like arrived, that I think it was on the Chamber of Chicago that they did something like that. Like it was like a cool title, but they're not that big of a deal, in my opinion.
The way I kind of see it is that it's similar to you're preparing for growth in a city. So let's say you live in a big city and then you're 10 miles out, 5 miles out, they're building additional infrastructure. They're building more freeways, right? Nobody's using the freeways. It's 5 miles, it's 10 miles out of the city, but they're preparing for that growth. So it's almost to me similar to that for when the market comes back, when the spigots kind of get turned back on. Now you've got a new on-ramp into the space. For Argentines. So I think that by and large, it's more of an effect of that. So maybe today it doesn't really mean much because right now there's just not the demand yet, which actually let's talk about that a little bit. So we saw Bitcoin break $30,000 to the upside over the last few weeks, and now we've seen it kind of peak back below. Does this mean anything? Who's watching the markets here? Michael, do you have any comments specific maybe as it relates to the technical side of things? Maybe is this a buying opportunity for some people? You said that this kind of this could spark the new bull run. Is there anything technically that looks interesting?
Yeah, I mean, like from an attention perspective, I think our bull run is being sparked. But technically, I think we can go back to 20K, no problem. I don't think we're going to make new lower lows, lower than 16K or whatever we went to before. But I think this is all just the ups and downs. People are going to get excited and they're going to go too hard. Leverage trading really like makes things swing a little harder. So everyone sees these headlines, they start going long, and then we go to the downside and they get wiped out. And then people start to go real bearish. A few bad headlines come in, everyone starts to go short, and then we're free to go back up again to squeeze those shorts. So I think we're still in the rough of it ultimately. And anytime Bitcoin goes, you'll be looking back in a couple of years today, and if you got Bitcoin anywhere in the 20K range, then you're sitting pretty, I think. So yeah, I would say it's a buying opportunity under 30K. I think it's really like it's really strange to worry about saving 20 or 30% on your buy-in, and that's like the difference between 30K and 20K when we're looking at a 10x in Bitcoin over time. So it really depends on your time horizon of each individual looking to deploy. That's what I think.
Awesome. VJ, what about you, my friend? Do you have any comments on the market in general?
Comments on the market, been keeping an eye out on some of the early projects that are coming on.
Yeah.
So the theme that we are betting on is innovation never stops. You look at the past 100-year history of technology innovation, whether it's through World War I, World War II, through multiple recession, depression, what happened with the Gulf War, the 9/11, the housing market crisis. Through all of this, the stock market can go up and down, but technology innovation never stops. It just keeps on continuing to move forward. And that is a safe bet to make, because in an ever-changing world, how do you invest? How do you make sure that you are getting the returns? And the way to do that is by betting on things that don't change. And one of those principles that don't change, and we don't see that changing anytime in the near future, is technological innovation never stops, right? That's a principle. And we are looking at one of the projects we're looking at is Layer 0. Layer 0, it's a cross-chain interoperability protocol. It allows different assets to move from one chain to another, right? Right now, if you have asset on Bitcoin, you won't be able to trade it on Ethereum, or if you have on Ethereum, you won't be able to trade it on Binance. There have been other people who have tried providing the bridge between the multiple chains, and I mean, we have used some of it, and it's there are issues with it. The confirmation takes a long period of time. And Layer 0 is attempting to solve that. They have a couple of protocols, like some really big names who are building on top of Layer 0 to be able to provide the interoperability. Stargate launched for being able to bridge funds across the various chains. That's pretty exciting. We have seen other decentralized protocols, like SushiSwap is one of the first to kind of enable being able to make cross-chain asset exchange, which is pretty cool, because you can have an asset on Ethereum and be able to exchange it for another asset on the on Binance chain, right, or on Arbitrum. So those kind of innovations are what we are excited about and looking forward to.
On that note, actually, did you guys see multi-chain go down this week? That's pretty crazy. And I think as a result of that, 1inch actually went up like 100%, because they're the next most popular bridge option. I'm not sure if that's the case, but do you guys have any insights on it?
Yeah, I did not look at the 1inch and what was happening there. There are some, don't know specifically about multi-chain either. However, there are some projects. I saw one which allows you to mint NFTs on multiple chains, right? So right now you have CryptoPunks, which were originally on the Ethereum, main chain, and then now you have other ports of it. There is a holograph which allows you to mint NFTs on multiple chains, and that is a pretty cool innovation, because there has always been a question: if I am minting a Bored Ape on one chain, does the Bored Ape on the other chain, on Arbitrum or Polygon, does it have the same value? Can I sell it? What happens if I sell my main one on one chain? So technology innovation like that for being able to mint on multiple chains, that's a pretty cool technological progress. And I'm sure some other projects are going to be utilizing that to be able to mint NFTs on multiple chains.
Is it kind of your thesis? Oh, go ahead, Michael.
I just wanted to comment on also what you said earlier, Vijay, about technology always moving forward. I mean, that's very true. Technology continues to move forward, but also new technologies sort of quash old ones. So technology tends to like go 100x, so to speak, or go to zero, I think is what we usually see. So you also have to sort of be on top of things as they evolve, is all I was going to add.
I completely agree with that, because your thesis has to be right? Like it's important to have a thesis into what you anticipate happening over the next, say, cycle, for instance. I think a lot of crypto investors fall prey to, they get married to their tokens from the previous cycle. That they become relics in the next cycle, and they don't adapt. The use cases change, the environment changes, and so servicing those use cases completely changes. And so a lot of people end up holding on to relics of tokens that just are left for dead. Communities are gone, development's gone. I think that is one of the biggest mistakes most people make from going from a bear cycle to a bull cycle, is that they think that their tokens are just going to get revived. And that doesn't happen, unfortunately, for most of the tokens. They're just left for dead. And it's new tokens, new innovations that actually come out that create the value, and they're the ones that get the largest amount of pump to the bags. So it's important to really do your homework, do your research into what's going on in the space. Vijay mentioned, he gave some breadcrumbs there. I think that's really nice of him. So Layer 0, I mean, there's lots of different interesting projects that are not stopping. They're still developing, and it's important to be in tune with what's going on with those projects so that you can make the most informed decisions for your portfolio over the next coming bull cycle. So maybe you would say something else, Michael.
And just consider AI, and how much that's going to upend how people do things. So, there's going to be two types of companies in the future: those who use AI and those who are out of business. So I think that should be part of your sort of investment thesis, is like, who's really leveraging these tools in effective ways, and who's kind of like sidestepping it and thinking it's just a fad. I think that's also important to consider.
Oh, I saw like a cartoon. It was like a comic the other day, when in the years where like motor cars were like becoming like a thing, and it was like a horse talking to a car that was like, it stopped because it had no more fuel, and the horse was making fun of the car, saying like, you will never be the next like technology, you're just a fad, and things like that. And it's like, I think like negationism is a little bit like natural in when we feel like these new technologies are coming, right? We feel like, oh, I'm not so sure, I'm like, AI will never prosper, it makes stupid things. And I feel like when you feel that, that's where you should go in, because that's like what ends up happening.
Yeah, follow the comics. That's my investment thesis. I feel like I'm doing 10 times more than I was before with things like ChatGPT. But I also have 10 times more things to do now. So it's kind of like a new baseline, right? And I feel like you can extrapolate that to actual organizations. The ones who embrace and their employees are all using this stuff, they're going to be able to do 10 times more, but they're going to have 10 times more to do. And that's going to be interesting to, see what happens.
So Michael, Mariano, VJ, you guys are always talking to founders, right? You're typically talking to founders of different projects that are launching or about to launch or have launched or whatever. So is that now a question that you're posing to your founders? Like, hey, are you using AI, and how are you leveraging it in your project? How are you getting to, product market fit? How are you getting to actual deployment utilizing AI? And are you using AI? So I'll throw that out there to you guys.
Yeah, I've definitely asked that question a number of times talking to founders in the last few months.
Yeah, so we are also seeing every pitch says that they use AI, and what does it actually mean? If you use ChatGPT, are you really using AI? Like, no, which is good, but it's like saying that we are using the internet, right? Like, now imagine a company launching in the late 90s and saying they're using the internet because they did a Google search, right? It's like using internet and doing Google search are completely different things. If it's an internet native company, that's a different story. Whereas they did a Google search to find something on the web, right? It's not an internet native company. Similarly, there are AI native companies which essentially have AI at the core of its innovation. And at the same time, every company now pitching says they are, we use AI. But if you actually dig in, what they're doing is they are using ChatGPT, right? What they are using is that, one particular part, it's pattern matching, but now it's called AI. So it's more of the other way, wherein which every company says that they are using AI these days. On the other hand, the existing portfolio companies, we've also been thinking about and helping guide them for how to better utilize all these tools. How can the existing companies increase their productivity for being able to do things quicker, faster, cheaper?
Love it. Mariano,
one thing I just wanted to say is that I went through an accelerator in Silicon Valley called Draper University last year. And from my cohort, let's say, like, if you take 10 companies that did the cohort with me, right? And they were like established companies, they were already generating revenue. I would say 4 to 6 of them, they changed their model into like their business, and now they use AI in their business, right? But they do not like just use it themselves, but their company is now an AI company, and they use AI to generate something for you. So that
it's like when Blockbuster became a blockchain company back in the day.
Totally.
Was it Blockbuster or Long Island Iced Tea, something like that?
Yes, exactly, something ludicrous like that. And then they went public, right?
Yeah.
Or they did like a reverse SPAC, or I can't remember exactly what they did, but it was a money grab. So I think as an investor, you got to obviously practice a lot of due diligence. You got to be very, very. It's going to be rife with scams with AI coming out, the valuations are obscene. Look what Nvidia is going. I mean, Nvidia is now what represents like 3 or 4% of the entire S&P, like where it didn't before. It's crazy.
1.2, right?
That is 1.2%, but it
no, 1.2 trillion.
Yeah, 1. Yeah, it represented nowhere near that. Just even a year ago. So I think it's important to like, all right, let's take a deep breath. Let's not try to chase a roller coaster, right? And let's just do some due diligence here. We got plenty of time in the space. I think in the next several months to years. To your point, Michael, you're looking at hey, I got my seeds here. I'm getting ready to start planting some of them. So let's actually speak about that. Well, before we speak about that, I do want to mention one other thing, that there was a Crunchbase report, I think, that came out that showed that like Web3 funding from VCs is down like 79-80%. So that I think is significant, but also it reminds me of the whole thing that, Warren Buffett says and what, Sir John Templeton says, which is, when get greedy when others are fearful and fearful when others are greedy. So you're seeing that the funding is down dramatically, 79%, peak to trough. I mean, this could be a great opportunity to start really looking into seed investments. So, VJ, I know that you've got your ear to the ground on a lot of these. Is there any specific area that you did mention Layer Zero earlier, but is there any specific, I guess, sectors of the crypto space that you're particularly that you particularly find attractive?
Yeah, been looking into opportunities where we can take this technology of blockchain and make it available to people without people even knowing about it. For example, OpenAI had GPT for a long period of time. They have been developing it for a while. GPT 3.0 came, we were playing around with it, and it wasn't really impressive. When ChatGPT launched in, when was it, like November of last year, that was a pivotal moment because it made the tools accessible to everyone. Like, you don't need to be a programmer in order to use these tools. And that was a pivotal moment that made it available for anyone to be able to use this technology. And blockchain has been in that realm for a long period of time right now. It's a great technology. However, there hasn't been a user experience moment which makes it easy for a common person to use it. And one area where we think it has potential is in the gaming space. It's one of the themes for the year, maybe the next few years, is Web3 gaming. There are a lot of opportunities in the Web3 gaming space.
Excellent. Michael, I suspect that you're going to somewhat agree with that.
Oh, absolutely. I think, gaming has a ton of opportunity in it, but it's super early still. But I don't think people care how good the graphics are. They really just care about like the gameplay loop. So I'm really just playing around personally with a bunch of different games. Yuga Labs has a little like robot game where you it's kind of a passive game where you build stuff, and like it takes like 2 hours for your thing to build the thing. So you go do other stuff and work, and then you come back. I personally like that mechanic because I can keep up with whatever they're doing while still accomplishing everything else I need to accomplish, and it doesn't really take up that much time. So I think like things like that are what the cryptocurrency space, but really like these days I'm not a gamer anymore like I used to be. I don't really spend meaningful time, 5 hours a day playing video games, and it's still going to take a lot of time for the traditional gamers who are playing now to really give a crap about crypto. I think a few major events have to happen. Like Fortnite needs to get into the NFTs first in a way that actually connects with people, or some of these other games. But I think again, I would look to AI, like gaming companies that are leveraging AI to create new styles of games or new styles of storytelling or more interesting NPCs. I think that are unique and interact with each person individually and remember what they talked about with each person, and that affects how they might treat new people. I think those games are going to start really becoming interesting over the next 5 years. So as an example, there's Project Kaizen by what's his name, Tom Bilyeu. And he's doing impact theory, which is a whole entertainment like a company that is making that has, you know, movies and other things, but he's really been focused on this Project Kaizen portion of his game and building that out brick by brick. And again, this is really cool to, you know, maybe plant a little seed into in some way to get exposure, just so you have incentive to keep up with it. But I wouldn't go put all your eggs in one basket with Kaizen. I'm just mixing metaphors now. So Mariano, what do you think? I know you're major into these games.
I'm really into like blockchain games. In fact, like one of the first startups that I did, like in 2018, we were essentially a blockchain game. We didn't have graphics, but we were the idea of that. Hey, you can like buy tokens and play with them with an NFT or make predictions, and that was what in the past was essentially a blockchain game. And I remember like we played like a tournament that was like the best Ethereum games at that time, and we came in second in 2018, and the one that came in first was Axie Infinity. That is like now like then it exploded, and they did the running network and everything, right? But I'm big in the blockchain in the gaming space with blockchain, and I feel like that's something that is gonna spike. But I do feel that the reason that it's not being more like widely adopted right now, it's actually not because of an incentive reason. It's not because you cannot make money on the game, but because the games are just so boring, are insanely boring. They do not feel like games. They just feel like a farming simulator or something like that. But even farming simulators are funny and fun to play. I feel like games so far, they have focused too much on the actual like token side that they forgot about like the user experience, the actual gaming experience, making it fun and making it like enjoyable, and not you just like do it for a token or for something like that. I feel like the focus that game studios have put on blockchain games were actually like degenerates like Michael and me, you know, like that they just want play for tokens and things like that. When the way to generate like 1 billion users playing a game, right, is to make it fun and an enjoyable experience. And one more thing is that almost none of the blockchain games can be played on the phone. And if you cannot play a blockchain game if you cannot play a game on the phone, you are already like eliminating a huge percentage of like casual gamers and casual players. That is the vast majority of the gaming market.
Well, this kind of really dovetails well with, I think, what VJ was saying, right? So there's a lot of missing the product market fit from the blockchain development, specifically blockchain game development. They're focused more on tokenomics. They're focused more on maybe graphics. They're focused on the things that maybe don't necessarily matter as much as the gameplay, the product market fit, and being able to do mobile enabled. Right? I mean, if you're thinking about who's playing games, sorry, I'm 42 years old. I'm not kind of like Michael. I'm not spending my time 5 hours a day playing games necessarily. So you do have a younger demographic, however, that appeals to, right? So and what are they doing? They're always on their phone. So that game needs to be mobile enabled. So I think that's a huge kind of overlook that a lot of these game developers are kind of missing. That they're not necessarily looking at who is their customer, who is the product market fit, and how can they best optimize for that. Michael, it sounds like you were going to say something.
Yeah, again, Tom Bilyeu with that Kaizen, I heard him on a Spaces recently, and they're really thinking about mobile experiences, storytelling, and creating like mini like game loops where it actually makes sense for you, like while you're in line, to jump on with your phone into Project Kaizen and accomplish a small quest really quickly. He's really aiming to achieve that, and not only that, he's really making an effort to like partner with other blockchain companies like CyberKongs, like Neo Tokyo. He just did a major partnership announcement with Neo Tokyo where everyone who, you know, hit a certain threshold, who owns a certain asset of his, they're going to get a free Neo Tokyo helmet for their characters inside of Project Kaizen. Now that's a great cross promotion between those two companies, and Neo Tokyo is like the Soho for gaming. It's where all the developers go and all the owners go, and they're mingling and paying attention to the whole gaming space, and really, you know, building. So that's like one example, and not just the helmet, but they're creating a pack of different things that your character will be able to wear. And he talked a lot about, I think he was referring to Ready Player One, where you have like your lobby space, I guess, and then you have like your gameplay space where you'll be like fighting or doing a mission. And so he was talking about like the hit area of a helmet. It doesn't matter what the hit area is when you're in the lobby space, but when you go into the game space, it has to have like very specific specs. Otherwise, the guy shooting you doesn't know if he's really shooting you. So he talks about how like your lobby space assets might convert when you go over to actually play a game, and he's really thinking about that user experience and how that's going to play out. So I think that's the only person who I've really seen thinking about mobile, thinking about how to create a good user experience. And I think he's using AI tools in a way that no one else is, and he's going all in on that. So I think he's going to sort of pave the way, set the example for other games to follow suit, while other ones have been falling behind.
You mentioned another thing too there that I think is important to underscore, and that's partnerships, especially in lieu of a market where we're at. It's important that developers, that founders really focus on partnerships, right? How can they establish partnerships, in and amongst the space, right? Because I think it's kind of like, supporting one another and creating this kind of web of infrastructure that can kind of support one another into the next bull market. So, Tom Bilyeu doing this with Neo Tokyo, doing it with CyberKongs, doing it with other different various NFT groups, hugely important. So let me ask you guys this. Are there gaming projects that were kind of the old, market, the bear market or the bull market of before, that you see surviving into the next? Like, is there any games that did well, that designed their games well, or are maybe even retooling, that are, that are equipped to capture value in the next bull market? Or do you think it's just literally, it's just, throw them all on the scrap heap and let's start anew?
Not financial advice, right?
Of course not.
I mean, I like many of them, but I only have money on one of them, which is there's a game called Illuvium that essentially they kind of arrived late for the last bull market. They did very well. They raised like a lot of money, but they weren't like completely in the bull market, in my opinion. And what it's good about that game is that it's main like dynamic. It's like a card game where you battle against other users, and that's where the actual like experience is, where you like the token incentives is just like a poker tournament between you and me, Dominic, right? We challenge each other and we use our skill on a game to play against each other, and it's quite fun, the game, because it's like a card game, in my opinion. So I mean, there are many experiments from games that I'm liking, but that's the only one that I still think that, even though it's still being developed and it hasn't like deployed, it has the possibility of surviving, but not financial advice.
Yeah, I'd be looking at again, like the games who have created a big war chest for themselves, i.e., they have a ton of money behind them, and the ones that are looking forward and utilizing the tools, the AI tools, in an effective way, and creating partnerships. Those ones are going to survive. So like one I might point to, which I honestly don't know anything about other than hearing a little bit of Twitter stuff about it, is Wolf Games. I know that they had a very sustainable way of vesting the tokens that they were giving out, and they have a pretty complex ecosystem that they've created, and they got the war chest. So I think that they're really forward thinking and they might survive. Although I haven't played them, I don't own any assets. I don't know. I haven't done really any research on it. I just know a little, those few little tidbits. And I can't really point, Nifty League Degens. Have you played that, Mariano?
No.
They have really fun gameplay. It's like Super Smash Brothers, and they make partnerships with, and they get the sprites from like CyberKongs and Kaiju Kings. So you can jump in with your CyberKong, and then you can fight a Super Smash Brothers style battle with other people. And it's really, they do tournaments. I think they also might have amassed a pretty decent war chest. They are sticky enough to play. Like I could play that for at least 20 minutes. That's pretty long for me these days. And I think they might survive as well, over some of these other ones. And also, like you alluded to, Mariano, like the ones that didn't get a ton of attention during the bull run, but they got their heads down building. I think those ones will have a chance to show themselves and show people what they got. So games like Ugaverse, that probably nobody heard of. They built a big war chest. Their assets are worth absolutely nothing yet, but they have a big roadmap, and they've been slowly and surely, brick by brick, building something. And games take years to make, not a year. So I think those are some ones that I'd be considering looking at.
Awesome, Michael. Beautiful. VJ, do you have any comments? And we'll tie everything up here in just a little bit here.
VJ is the biggest gamer out of all of us.
Not that big of a gamer. I used to play a lot of games, but these days, play some chess for some intellectual curiosity, and also the Zelda game, Tears of the Kingdom. It came out recently. Used to play Breath of the Wild before I gave the terminal away to my nephew. Having said that, gaming is an area where in some ways it's kind of like movies, right? You don't know which movies are going to be a hit. Obviously, all these blockbuster movies with big names, they are going to have a big release, and you could somehow predict how these movies are going to do. Similarly, in the gaming space, you have blockbuster titles like that have an established user base, and you know that they would do well. However, from an investing perspective, it's very challenging to do a thesis-driven investing in the gaming space unless there are things like the marketplaces, right? If you look at the Steam business model, it is great if you think that the gaming industry is going to grow. Betting on a marketplace like Steam, regardless of which studio wins, the marketplace selling the game like Steam is going to be successful. So similarly, there needs to be a Web3 marketplace that's similar to Steam that is selling all the Web3 games. We have made some personal investment into marketplaces like that, which we believe there would be some player or maybe multiple players that are marketplaces for being able to sell Web3 games.
Excellent. Fantastic. Thank you, guys.
I would just add, platforms onto that. So not just marketplaces, but gaming platforms that are hosting maybe just advertising within games, or maybe marketplaces for assets to go between games as well, or to create, take your asset and make it usable in 2D and 3D and in all the different mediums. Platforms like that might also see some success, the picks and shovels of the gaming space, let's say.
Some versatility among different platforms, right? So being able to kind of interoperate those assets on multiple platforms, I think that's going to be interesting as well. Definitely. So Michael, you touched on one final thing I want to say before we go, and we kind of put a bow on episode number 2, y'all. So one of the things you mentioned that I think is so critical for investors to be thinking about right now is that if you have an asset that is anything not named Ethereum or Bitcoin inside the crypto space, of course, anything not named Bitcoin or Ethereum, it's incumbent on you to really understand what you own. And part of understanding what you own is, Michael touched on it this game company's got a big war chest. Okay. So they've got enough runway. They've got enough runway to sustain burn for 2, 3, 4, 5 years, right? Many companies do not. And they're not going to tell you that they do not. So it's important that you understand how much did they raise? What is their approximate burn rate? So maybe even doing a calculation on that to know that, hey, the token that I'm holding right now is probably just going to flame out over the next 9 to 12 months if the market doesn't return, right? So being able to do some calculations on that is a way to get granular in your own portfolio, but highly important and necessary, especially in lieu of today's climate. So I'll just leave that for everybody to kind of maybe a little homework assignment for people to do on their own in their own portfolio for any tokens that are not named crypto or Bitcoin or Ethereum. So just wanted to share that with everybody. Episode 2 in the books. Welcome. Thank you so much. Appreciate you guys, and we'll see you on the next episode next week. So thank you guys for coming.